almost blew my trading account 3 times. Not because I was stupid. Not because I didn't work hard. But because I broke one rule that nobody takes seriously. Until it's too late. This single rule didn't make me rich overnight. But it stopped the bleeding, saved my account, and gave me a real path to financial freedom. And if you stay with me, I'll show you exactly what the rule is, why most people ignore it, and how it quietly decides who reaches fire, and who keeps starting over. The painful truth about why accounts really die. Let me start with something uncomfortable. Most trading accounts don't die from bad strategies. They die from one bad decision repeated over time. I know this because I lived it. I had charts. I had indicators. I had YouTube tabs open at 2 a.m. I felt prepared. But my balance kept shrinking. Not fast. Slow. Quiet. Like a leak in a tire you ignore until the rim hits the road. Here's what no one tells beginners. You don't lose your account on your worst day. You lose it on average days, when you feel confident enough to bend the rules. One extra trade. One bigger position. One "this setup looks really clean" moment. That's when the damage happens. And this matters beyond trading. Because if you care about fire, financial independence, early freedom, trading is not the goal. Capital survival is the goal. Side hustles fail for the same reason. People don't burn out because they didn't hustle hard enough. They burn out because they bet too much energy, time, or money on one outcome. And that brings me to the mistake that nearly ended my journey. I thought my problem was strategy. I was wrong. In the next section, I'll show you the exact belief that kept me stuck, and why fixing it changed everything. The lie that keeps you broke and overconfident. Here's the lie. If I just find the right strategy, everything will work. That belief feels logical. It sounds smart. And it's deadly. Because it pushes you to focus on winning, not surviving. I chased indicators like tools in a video game. Every loss made me think, this system is broken. So I switched. Again. And again. What I didn't see was this. Even a good strategy can't save bad risk behavior. Let me put it simply. If you risk too much, wins don't matter. If you risk too little discipline, time doesn't matter. Most beginners want fast results because they want fast freedom. I get it. You're tired of school, jobs, limits, or depending on someone else. Trading looks like leverage, like an exit. But pressure creates impatience. And impatience kills accounts. Here's the moment it clicked for me. I realized professional traders don't obsess over how much they can make. They obsess over how little they can lose. That flipped everything. Because fire is not built on big wins. It's built on staying in the game long enough for compounding to work. And you can't compound a blown account. That's when I finally accepted the rule. Not the flashy one. Not the exciting one. The boring one that saved everything. In the next section, I'll tell you the exact rule, word for word, and why it feels so hard to follow. The one rule that saved my trading account. Here it is. Never risk more than a fixed, small percentage of your account on a single trade. Ever. That's the rule. Simple. Unsexy. Powerful. For me, that number became 1%. Not around 1%. Not 1% unless the setup is clean. Just 1%. Every time. Let me explain why this rule works. When you risk 1%, 5 losses don't destroy you. They teach you. 10 losses don't end your journey. They sharpen your judgment. You stop fearing losses, because losses stop being dangerous. And that changes your psychology. You don't revenge trade. You don't overtrade. You don't pray for price to come back. You become calm. That calm is your edge. This rule also exposes bad habits fast. If you can't follow it, the problem isn't the market. It's discipline. And discipline matters more than intelligence in every side hustle. Whether it's trading, content creation, or investing, people fail when they bet too big too early. They want results before skills. This rule forces patience. It buys you time. Time to learn. Time to improve. Time to stack small wins. And here's the part most people miss. This rule doesn't limit your upside. It protects your downside. Upside comes with experience. Downside comes from mistakes. This rule forgives mistakes. Next, I'll show you how this rule connects directly to FIRE, and why most people quit right before it works. Why this rule is the backbone of FIRE. FIRE is not about income. It's about control. Control over your money. Control over your time. Control over your decisions. And control starts with risk. People think FIRE is built by massive gains. It's not. It's built by not blowing up. Look at long-term investors. Look at business owners who last decades. They don't avoid losses. They avoid fatal losses. This rule does the same thing in trading. It turns trading from gambling into a process. A process you can repeat, measure, improve. That's the mindset shift. Once I followed this rule, something strange happened. My account stopped swinging wildly. My emotions settled. My decisions improved. I wasn't smarter. I was safer. And safety is what lets compounding work. Think about it. A 2% monthly return doesn't look exciting until you stack it for years. But you can't stack returns if you reset your account every few months. That's why most people quit right before progress shows up. They chase speed. They ignore survival. This rule forced me to slow down, and that's when momentum appeared. Not on the chart. In my behavior. In the next section, I'll show you exactly how to apply this rule step by step, without overthinking it. How to apply the rule, without overcomplicating it. This is the easy part, if you let it be. Step 1. Pick your risk percentage. Start with 1% or less. Not because it's magical, because it's forgiving. Step 2. Calculate risk before you enter the trade, not after. If you don't know your stop loss, you don't have a trade. You have a guess. Step 3. Accept losses fully. No moving stops. No hoping. No adjusting because price might reverse. Losses are business expenses. Treat them like rent, not emergencies. Step 4. Track consistency, not profits. Judge yourself on rule following, not account growth. Because growth is a side effect of discipline. Here's the hard truth. This rule feels slow at first. That's why people quit. But slow is stable. And stable becomes fast over time. The market rewards patience quietly. And once you feel that shift, you'll never trade the same way again. Transitions are open loops, closed. Strategy wasn't the problem, risk was. Winning mindset, survival mindset. Fast money, long-term control. Trading rule, FIRE foundation. All open loops resolved. If this rule clicked for you, don't stop here. In the next video, I break down the daily habit that made this rule automatic. The habit that stopped emotional trading and turned discipline into muscle memory. Watch that next. Because knowing the rule is easy. Following it is what changes your life.